run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time.
Right. Good morning, everybody. Happy Friday. This is the morning show here on Stock Market TV. Spencer Israel, JC Parets with you on this fine January 3rd. We got a lot to talk about. Market's been interesting, huh? It's been interesting, right? We got the market in quotes going down. But let's look under the surface. Let's do that with JC. Let's look under the surface here. Let's see what's actually happening. Because the price action is certainly interesting. Who will we have on the show today? We'll have Kenny Glick on the show today. We will have Louis Sykes on the show today. It's Crypto Friday. We will hopefully have, because we bailed on him yesterday, Sean McLaughlin on the show today. So that's the plan. And smash the like. We got me. We got JC. We got you. Let's boogie.
All right. What's moving this morning? Live cattle futures making new all-time highs.
What? I didn't. Those aren't on my screen. So
Same thing with the feeder catchers. You see what I did there? Moving this morning.
I see that. Very good. Very clever.
You
I
like
did not
that?
know this. This is news to me.
You know, you'll be good at your dad jokes when it's your time. The time is coming,
I'm
your dad joke game is gonna step up. Whether you like it or not, it just happens. It's like physics, I think.
It's just like the natural order of life.
It's just a natural order of life. That's right. So should we? I mean, before we get into the state of the markets, I mean, is there anything bigger happening right now than in cattle futures? Here we go. Here's slide. Throw up slide one there. Slide one. So for those of you who are going around looking for new all-time highs, here's another one.
Come on.
That's not it, Spencer.
Oh, wait. You said slide 2.
You're killing me, Smalls.
You said slide 2.
I did say slide 2. Slide 1.
Oh,
sorry, my fault.
Jeez Louise, man.
There it is. Live cattle futures. Don't have a cow. It's just perfectly normal. It's just an uptrend, you know?
So on Monday, it was what? Natural gas?
That's right.
And today it's live cattle futures.
That's right.
What is happening in the futures markets?
What's your beef with this chart, Spencer? You don't like it?
I don't not like it. I've never traded live cattle futures before. I wouldn't even probably know how. So
listen, there's a lot at stake here. That's for sure.
Come on.
I'll stop. I can't anymore. I can't. Too much. Too soon.
This is like if I had a grade of this chart, it's like an A1 chart. That's what this is.
Hey,
A1.
Come on now. Yeah. Look at this guy participating in the fun.
All right, come on. We're having fun.
All right. Too much fun here with the cattle futures, making new all-time highs. Now you can throw up that chart that I know you like so much. Our in-house sentiment study expert is been a little holiday, so I'm stealing this one, taking this one from friend of the show, Kevin Gordon. We got to have him back. Kevin Gordon, showing the American Association of Individual Investors running scared, fewest bulls among AAII investors since April of last year. So for those of you who are interested in what 300 boomer Republicans from the Midwest feel about the stock market, here you go. And, you know, that might be a little oversimplistic, 300 boomer Republicans, but that's probably, that's how I think of it. right? It might not all be boomer Republicans. It might be 200, right? But in my head, that's what this is. Like the National Association of Active Investment Managers also running scared. Those to me are financial advisors, right? Like, and a lot of them actually are. So that's how I think of it. Active financial advisors. Then you're looking at the Investors Intelligence. Those are newsletter writers, right? And then here we're looking at the American Association of Individual Investors. Again, in my head, how I approach this, whether it's exactly like this or not, it's 300 boomer Republicans from the Midwest, right? That's what this is. And so when this particular segment of investors are incredibly bullish, that's historically not a great thing. What's the best thing for stocks is when this particular group is super bearish. The more bearish they are, the better it is for stocks moving forward. So here we are. Lowest level since April. How do we feel about that, Mr. Spencer?
I found it interesting that I mean, this survey it looks the way it looks for a reason, because people their mood can swing wildly week to week. This is a weekly survey. So the market had we had that. I'm looking at just looking at the S&P. We had that big down day like 3 weeks ago. Then we had that sort of like V bottomy, and now we're back down to where we were, right, at on like the 20th or whatever. So this the far right side of this chart kind of mimics the overall index, at least the last few weeks. But I don't read too much into these. I learned that from you, right? Just maybe if you wanted to take a composite, but like I don't do as people say, not as they feel, right? Or do
as they do.
Do as they do, not as they say, right?
That's right.
That's it.
All right. Why do you say we get to the state of the markets? Right?
Yeah. All right.
Enough cattle jokes and boomer sentiment indicators. Let's see what's happening.
I mean, wouldn't you be a little more nervous too if you were managing a bunch of clients' money and your retirement money, and the market is?
I guess. I mean, I personally don't care about other people's money.
I know.
Myself. And by the way, so are these people. They're not managing other people's money either.
It's been an inauspicious start to the year. So
these people are the same as me, except I don't think I'm as Republican, and I don't think I'm as I'm definitely half the age. Maybe not half the age, but
look, it's been an inauspicious start to the year. Can't argue that. All right, let's talk about the markets. Let's see what's happening.
All right. We've got the Dow futures this morning up 130 points. That's a third of a percent to the upside, just under 42,000, just above 42,800 for the Dow futures. S&P 500 futures also up a third of a percent. That's 20 handles, 5,936. NASDAQ 100 futures up 0.5%, almost 100 points, 21,260 to the upside. 30-year bond futures up again. I'm used to saying 30-year bond futures down again. These days, I find myself saying 30-year bond futures up again, almost 0.5%, back above 114. Crude oil futures up 0.5%, 73.5 for crude oil. That's something new. Copper hanging in there, hanging on to that 4 for dear life. 405 up 0.5%, couple pennies on the day for copper. Gold down almost 0.5%, 2660. That's been steady Eddie right there, not moving either direction. Silver up 1% and change, back above 30.25 for silver, with the volatility index back under 18, 1766 for that volatility index. And then over in funny money land, got some action. Bitcoin pretty flat this morning, but hanging on to those gains from the last few days. 96,500, down about 0.5% on the day. Ethereum up almost a full percent, pushing 3,500 for ETH. Solana leading the way this morning, hanging above that 200 level, 213 for Solana, of 2.5% on the day. Binance continuing to act well, 705 for Binance. Total crypto market cap, Mr. Spencer Israel, 3.35 trillion with the Bitcoin dominance, making new multi-week lows this morning, lowest levels since mid-December. For that Bitcoin dominance, a lot has to do with Ethereum relative strength, Solana relative strength. What stands out this morning from the futures?
From the futures, not a lot. But from yesterday, yeah, I mean, like I said, it's I saw you tweeting about this morning actually and yesterday, so maybe you can opine as well. But could you not say it's been an inauspicious start to the year, and actually at the end of last year as well? It's been an interesting couple of weeks, so you can understand why people are sort of looking around a little bit, right? Seeing what other people think, because markets are volatile. So that's what
You're saying that the current markets are volatile?
I mean, I'm not talking about in terms of like the VIX and volatility, but in terms of just like the direction of things. Yeah, right. Um, but would you not agree? I mean, the indexes are, end of the year lower than they had been, start of the year going down.
Listen, the stats are, eye-catching, worst end to the year since like 1953 or something like that.
Right.
Yeah, I guess. I'm in Sean's camp, and I don't want to steal Sean's thunder, but Sean did make a good point in our meeting yesterday about how, just so many weeks in a row with interruptions in trading. It's like a weird, like you can't, like the daily closes, the weekly closes, even the monthly, even the annual closes are just like odd. So it's hard to trust it. People are confused. There's a lack of direction in a lot of assets. I think that's kind of what you're getting at. It's not so much the volatility as it is a lack of direction. There's so many sectors, individual stocks, bellwethers for their industries stuck in ranges. I mean, that's really the big theme right now. And I guess that's
yeah. And that's not just true for stocks. That's true for a lot of things. I mean, I would say the same thing for Bitcoin, right? It's like, what do you do? Wait till it gets above 100 again, right? I mean, right? Isn't that what you do? I don't know. I mean, as long as it hangs
100 is a big level for me for Bitcoin. I was poo-pooing that level.
I know.
Because I just didn't see any evidence that was going to be.
Well, you poo-pooed it the first time, but now I
was poo-pooing it for the majority of the time until that level really started to react. Was that last week? Even I'm confused. That was last week, right? Maybe late last week. Yeah, it was during our team meeting. So Thursday morning of last week. So a week from yesterday.
Here I'm pulling up a Bitcoin chart. I don't even know myself. Yes, it was
last Thursday.
Yes, yeah. It was last week and the week before that. No, it was kind of the whole month, honestly.
All right. So here's what I'm thinking. So 100 is a big level for Bitcoin. I didn't think it was before. Solana, you're looking at about 205. I'm stealing everybody's thunder.
You're still in Louis' thunder.
I'm stealing Louis' thunder. Is Louis in yet? If he's in yet, bring him.
Louis is not in yet. We'll bring him in when he gets on. We have Kenny as well today. He's back. So
look at this. We are back. Best morning show in finance, ladies and gentlemen. Can we just skip right to the 2 to 100 club, please?
Oh yeah, we have that table.
Because this has been front and center for me here over the last 24 hours, and I'll tell you why, my friends. I'll tell you why. Howard Lindzen years ago, a little bigger, calls me up and he says, "JC, we need to find the next $100 billion company." I'm like, "Great, that sounds like a great idea, Howard. How do we do that?" He's like, "I don't know." He's like, why don't you get with your team and figure out how we're going to find the next $100 billion company? I'm like, great, let's do it. So I call Strazza and the fellows, and I'm like, hey, guys, Lindzen wants us to find the next $100 billion company, blah, blah, blah. And then Steve Strazza was actually very instrumental in sort of creating the design for how we find these particular names. Number one, we eliminated all of the types of stocks that can't scale quickly to 100 billion, like utilities and consumer staples and marine shippers. Like those kind of companies are just not going to work. We're specifically looking for growth areas. Think internet, semiconductors, software, biotechnology, medical devices, right? These are the types of names that can actually scale. Now, what's going to be the next $100 billion company? It's not going to be the company that's 99 billion, because that might be the next.
Well, yeah, I mean, it will be.
Yeah, but that doesn't help us, right? So we're capping it at 30 billion, because even if we get it at 30 billion, it could still triple before getting to 100 billion, right? So we really like that a lot. So we're looking for companies between $2 and $30 billion in market capitalization, specifically growth areas that can be the next $100 billion company. You could take this down now. And the one last thing that I think is relevant to reiterate here is how we're sorting it. So when we went back and we studied every company ever that went to 100 billion, one thing that we found, and I know it seems obvious now when I say this, but without actually doing the work, it wouldn't be that obvious. One thing we found when studying every single company in history that scaled from $10 billion to $100 billion in market capitalization, they made a lot of new highs, like a lot of them. Like so many new all-time highs, like a lot. What we also found is that they didn't get to 100 billion by making a lot of new lows, right? And you might be saying, oh, thanks, JC, master of the obvious, JC. Yeah, well, it's true. So if we know for a fact that the only way to scale from 10 billion to 100 billion is to make a lot of new highs, then why don't we just start there? Why don't we just start with the stocks that are making new highs? And I also fit the other descriptions, those particular growth areas. So many Israeli companies, by the way, on this week's scan. Did you guys notice? Shout out Israel, outperforming the United States last year. And man, front and center. And by the way, it makes sense that Israel, listen, Israeli stocks are not always this dominant in the 2 to 100 club, but it makes sense for them to make an appearance regularly, considering the amount of technology and software and things like that are based in Israel. But man, I don't think that we've ever had this many Israeli companies ever in our scan. How do you feel about that, Mr. Spencer? Israel.
Wait, what was this one that was after? Is this Israeli?
Yeah, throw that up. That's just the type of name that comes out. So just because they come out on the list doesn't mean we want to buy them. Just a good place to start looking, right? It's a scan. Think of it like a scan to start generating ideas. This is just one particular opportunity. Look at this base over the last couple of years. This is Globus Medical, GMED, medical device stock. Is this American?
I don't know this one, honestly.
It's not one of the Israeli ones, I don't think. This one is, in fact, from Audubon, Pennsylvania. How about that? I don't know where Audubon, Pennsylvania is.
What's the is it the IHI? What's the medical devices ETF? IHI?
Yeah.
What do you think about that? It's stuck. All these things are stuck, man.
In a range. That's right.
Yeah.
And then what about holidays are over. We're back to business. Maybe not officially until next week. By the way, Spencer, can you drop the link to if the folks are interested in getting the 2 to 100 club, where they can find that?
Most certainly.
2 to 100 club, one of my favorite scans that we do. And then yesterday, so the reason it's top of mind, not only did the scan just come out yesterday, but also we did our 12th week of our 12-week mastermind yesterday, and it was all about growth stocks. It's all about how we identify growth stocks, the value of these types of names, how they tend to do in bull markets. In bull markets, historically, we probably want to be focused on growth stocks. This one's near and dear to my heart. So we did that yesterday. Guys, check out the 2 to 100 Club. Mr. Spencer Israel just dropped the link. And I want to say this is Steve's favorite scan. He might say the short interest one. He really likes that one. But this one's Steve was very instrumental in helping the design with this one.
My favorite scan changes probably like every other month. So it's been this one. At other points, it's been the freshly squeezed. At other points, it's been the Hall of Famers. So I don't know. My favorite scan is, but at the moment, it's probably this. So ask me again in February or March. Before we bring on Kenny or Louie, a couple of things I just want to hit on real fast. U.S. Steel is kind of the story of the morning here. In terms of individual news, it is down because the Biden White House has said, no, not today. to that Nippon Steel. That was my Dikembe Mutombo impression. No.
Rest in peace. Rest in peace, Dikembe.
Yeah. They're blocking the Nippon US Steel merger that was first announced now back in 2023. So 2 years ago, this thing was announced. And just now, there are reports this morning that White House says no. So US Steel is down 8%. And that's kind of the story there. It's been pretty range bound for a long time. And then the other big one of the day is Carvana, which got hit by a short report from our favorites over at Hindenburg. So Carvana's down on that. And those are kind of the two big headlines of the day. I can't wait for, well, I guess 2 weeks from now, JC, is when the banks report earnings. So that's exciting. We get earnings season again. But right now we're in this sort of lull, like you said, and not much going on. But just want to talk about this couple headlines real fast. U.S. Steel.
What about are they doing the farm payrolls? Are they doing those now?
Are they doing the farm payrolls? There is still not much to your chagrin doing the farm payrolls.
What about the non-farm ones? Are they doing
non-farm payrolls? That number is not out today.
Don't they usually do that on the first Friday of the month?
I think they do, unless it's like the very, very beginning, I think, is what I remember that being.
That's weird. So they didn't announce it?
No, I didn't see non-farm payrolls this morning, unless I'm just not looking right, but no.
As usual, I'm interested in the farm ones. I don't know why the farmers are getting so much hate.
There just aren't enough of them, right?
I guess not anymore, right? Post 1950, no longer America, no longer the agricultural economy that it once was.
JC, it's the third Friday, not the first Friday. It's the third Friday.
It's the third Friday. Oh, there it is. See, see. Got to put that on my calendar, on my economic calendar. I can't find my economic calendar. I don't know what happened to it. It's disappeared.
I had one. I had one somewhere. I've misplaced it in my computer, and now it's gone. So I don't know. Okay, what's the deal? Do we have Kenny here yet? No, we don't. Do we have Louis here yet? No, we don't. I want to bring them both on. Kind of at the same. Oh wait, we do have Louis. Louis Sykes.
I'm out.
Crypto Friday. Is that what's happening?
Do it.
All right, and then we'll do Kenny at some point. I promise.
Got my fingers on the pulse, avocado and toast.
Ludo.
Happy New Year, guys. How's it going?
Louis, having a great hair day today.
As always.
Thank you, sir. Thank you.
As always.
Are the Kiwis excited about the new all-time highs in cattle futures?
Trust me, brother. Everyone was talking about it at Christmas. You know, we were eating our pavlova, eating our trifle, our lamb. That's what everyone was talking about. Cattle futures, milk futures. What do you think we're talking about at a New Zealand Christmas?
So you guys eat a lot of lamb. So lamb, I'm not an expert like someone from New Zealand, of course. But the lamb is just a baby sheep, right?
It is. Yep, you're correct.
Yep. And then what happens when the sheep get older? They don't taste as good?
Well, then they become mutton, and then it's a stronger taste, and it's not particularly...
Yeah, a lot of mutton in India.
Yeah. Lamb's definitely the national meat. Beautiful. You can't really beat New Zealand lamb.
And then what about the cow game in New Zealand? You guys do cows too, or are you just doing the lamb?
Yeah, we're doing everything, brother. We're doing, believe it or not, we actually do have cows in the country. So
not as many
cows
as sheep though, right? More sheep.
Definitely more sheep. Hey, we love our sheep.
3 times as many sheep as humans in this country.
I remember that when we were in, I believe it was New York or California, you guys were grilling me that there were more sheep than the number of people in New Zealand. And then I said, hey guys, that's pretty much the case for every country. And we actually spent a few minutes pulling up the stats for sheep statistics globally.
It wasn't true, just in New Zealand.
And it just wasn't true at all. And then New Zealand just is. Yeah.
And then what part do you eat? The lamb chops, or do you do like a stew? How do you do it?
Well, we literally just, the lamb rack is just lovely with a bit of mint and a bit of crust. It's just beautiful.
I got to tell you,
you really need to come to New Zealand and try it out.
The lamb chops in Cinderella's castle at the Magic Kingdom in Disney World. Not bad. A little salty, but not bad.
Nice. Well, it's probably New Zealand lamb.
Doubt it. They have margins to meet. These publicly traded companies, Louis. I don't think so. Wine list, not bad either. Had an Amarone de la Valpolicella. That was lovely. All right, Lou Dog. So the relative strength in Solana, to me, is that the biggest story happening right now? Is it the crypto dick butts up 1,000% since Halloween, up 300% over the last couple of weeks? Is it the fart coin making new all-time highs, or are those just too small to be relevant? And Solana's the big story here.
Well, fart coin. Again, I just feel so stupid talking about fart coin. Just
why?
I mean, it goes without saying, doesn't it? But
No,
Solana,
no, actually it doesn't.
bigger than 20 or 30% of the Russell 3000. How hilarious is that? So Solana definitely showing a lot of relative strength. So what I've been saying, and Spencer, I want you to pull up this 3-pane chart that I sent you. There's 3 big levels that I'm watching right now. So Bitcoin at 100K or Bitcoin at this anchored VWAP. Those are 2 big levels in the short term. Then you got Ethereum at 35,500 or 3,500, sorry. And then you got Solana at 205. So those are some big 3 levels that I'm watching. And what I've been really proud of is that in December, we've just been saying, hey, look, there's not a whole lot to do in crypto. Just wait it out. The market's consolidating, and this is an ongoing consolidation within an uptrend. So just leave these things alone and just let them consolidate. And so what we're seeing now is we're seeing Solana break above this 205 level. But what I'd love to see is Bitcoin and Ethereum do the same thing. We haven't seen that yet, but it is positive to see Solana back above this key level.
If we're below 205 in Solana, then this invalidates all of that?
Yeah, precisely. And so again, there's nothing wrong with patience, right? And in fact, it's patience is what is required most times within markets. You want to let these things consolidate. And there's a difference between seeing a setup play out versus actually looking for one. If you're looking for a setup rather than seeing it instinctively, then chances are you probably need to let the market consolidate a little bit more and set up nicely. And so this big anchored VWAP from Bitcoin here off the all-time highs, that's a massive one to be watching just in the short term. If we break above that, we're probably heading back above 100K, and then the bull market's probably on. And so I think, and JC, I want to get your perspective on this. Obviously, macro is a really big story in crypto. We talk about the correlations between equities and the dollar seems to be quite a big headwind for crypto. So if you're a crypto investor and you're seeing the dollar just rally like it is, that's quite a big headwind for stocks. And then chances are there's also going to be a bit of a headwind for Bitcoin and crypto. What's your thinking there?
So in theory, right, if you would have told me the dollar was going to rip like it did, I would have said stocks would be selling off very aggressively. Cryptocurrencies would be under a lot of pressure. I'm generally pretty impressed with the resiliency in some of these assets despite the stronger dollar. Also, when I look at the positioning right now, I'm not shorting the United States dollar, but I am focused very attentively right now at what's happening in the US dollar, considering how overcrowded that trade is by fund managers, where positioning is in the futures market. The dumbest money on the planet is betting on a stronger dollar now. So when the dumbest money on the planet is betting on something going up and the smartest money is betting on the opposite, I want to see what the smart money is seeing. And I'm watching this very, very closely. Could yesterday have been that capitulation to the downside in the euro? Possibly. Again, I don't think that the professionals, the true professionals, come in until next week, and I think that's where we're going to start to see some real action. If you want to take a quick crypto break and bring in Kenny briefly, and then we'll get back to crypto if you guys don't mind. You guys like that idea?
Perfect. Sounds great.
Yeah, Kenny's
that works,
here.
Louis?
Yeah, cool.
All right. Kenny, where you at? Are you around? Yeah, he's around. He's always around.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny
There
Glick.
he is. What's up? Tough loss yesterday, huh?
Interesting wardrobe choice this morning. Oh, wait, you're on mute. You're on mute.
Kenny.
Wait.
There he is. Come on, first timer.
What?
Yes. You know, when I heard the saying, you never shit where you eat, I always like, all right, yeah, why would I go to the bathroom at the restaurant that I'm at? But doesn't even mean that, but which was funny. But you never bet on who you root for. So I won big yesterday. I don't want to say this. I couldn't say this in front of my daughter, but she kind of knew. I've always been a Notre Dame fan.
Wow.
So I've been rooting for Notre Dame since I was a kid because they were the only team you ever saw on television. Plus, when Rudy came out, who doesn't like Rudy? Rudy. So it was a tough game for me to watch. I can't believe it all came together like that. That was one of the most awful football games I have watched in my entire life. And then seeing my kid just freaking out over there, it was a tough watch. And I'm like, at least you're not a Jets fan. That's all I could keep telling her yesterday. At least you're not a Jets fan too. But yeah, tough loss. What's going on?
Nothing. You tell me. I mean, listen. You got the market, a little bit of a bounce yesterday, little maybe capitulatory low in euro. I don't know. That's a new local low in euro. And if that's the case, if that is the low, I think stocks rip from here. I think the opposite is true. If that euro rolls over and the dollar rips, I think the opposite is true and stocks remain under pressure into January. That's how I see it. I'm also interested in the bond market bouncing here. I know there's a little more macro than you like. You know, I know you like
Kenny,
to just dive right into the moon stock.
No, Kenny. I want to ask you about this ASTS. This thing won't go down. So
Yeah.
is 20 the line on the sand here? Is that it?
Throw it up.
You know what? It kind of has become dead money. I have moved away from the ASTS, which was like all the rage for a while. But I'm waiting to see if it gives way. Actually, that one looks like it might finally give way. But that's when it springs back to life. But under 20, you might be looking at 1750 finally. But each morning there's a new quantum stock, which is unbelievable. And I'm just this is
QSI today.
Yeah, QSI, of course. But the thing is, we knew about this one 2 weeks ago because it really just, I don't want to make it sound like this is as easy as this, but Google, I've been just Googling names, quantum stocks, quantum AI, names with the word quantum. That's why, I found that QNTM. That's the only one that hasn't moved yet. It's a biotech stock with the word quantum in it. But QSI woke up last week. And again, we just fast forward to this morning. I don't have my charts up, but, easy trading because, again, when you have the faux show bro, and let me see if I can get this. I don't think I have anything ready for you this morning, but I'll briefly explain. I'm a shorter, but I'm trapped in a bull market, and I've learned my lesson the hard way. I've never lost more money on any other trade than shorting. Every time. It's always where I've blown up accounts, blown my career up shorting. 2012, 2013, fighting the market like a loser. I'm a loser. Shorting is short-lived and you're going to die. And right now, these quantum stocks that are up 2, 3, 4, 5 thousandths of percent, the shorters are going, oh my God, I got to short these, but they do not want to roll over. So when they do roll over and they give the faux show bro, you buy them. And the faux show bro is a trap for the shorts because you're breaking a new low. So you're getting the fake out, shakeout. On that shakeout, you're breaking a new low. So when you break the new low, the shorts get encouraged and then you come back. So you're getting twice the buying on the upside. And then if you break VWAP like QSI did this morning, the shorts were onto something at around 427 this morning. But then it turns and breaks the VWAP at 450. We're in. So when you're buying the stock, the faux show bro area is your stops. And now you have blue skies ahead. And the stock just went from 450 to 550. And we're already sitting pretty, ready to rock for the rest of the day with this QSI trade. So the shorts are getting annihilated. And I mean, 3 weeks ago, RGTI looked like it was done for. And it's gone from $7 back to 21. So right now, you cannot get in the way of these names. What's different about ASTS? The volume's drying up. The stock's not recovering as well as it used to. And you see a little bit difference there. So right now, we're focusing on still the quantum names. They just don't want to go away. We're going to keep on riding this wave.
Throw up the QSI there on slide 8.
And Kenny, that's kind of where I'm at too. As long as there were moves like this happening every day, like how bad could the bull market really be? Right?
Oh yeah, the market's fine. Yesterday's low was just a test of last week's lows, but that now gives you a reason to sell. If you're real, and again, I'm talking about the Qs. I am a QQQ trader. I used to be the diamonds. JC always gets a kick out of that. I'm the only.
I did. You're the only person I knew that would trade the Dow Diamonds.
Everybody, right? And then I went to the SPY. I was trading ES for a while, but I went right back to the QQQ. I've been trading the Q since inception. That's how old I am. I've been trading the Q since inception. My dad's been in since 65, since 2003. We love the Qs. We love the Qs. Crazy. So yesterday, all that was a pullback and a test of last week's lows. Now you have a double bottom. So if you see the Qs back under yesterday's lows, that's your time to start shorting. And again, it's probably still going to be short-lived, but we're right next to the Trump bump. So if we break that 505 area, then we're getting into the area where we gapped from election day. If we get into that gap, we're going to give way, and then it could get a little, exciting down to 485 on the Qs. But then what? Then what? We're going to base out at 485, find our footing, and probably rally. I don't think we're going to. I don't think we're going to see stocks like Palantir go up another 200%. I don't think we're going to see some of these stocks that have had massive moves do what they did last year. But I don't think there's going to be some epic crash. And if it does, great, because we're still just day traders first, swing traders and investors second in my world.
Give me one more name.
You know what? I'm back on the SEDGE, SEDG.
Yeah, sure.
It has not Andy Dufresne to the point where I'm waiting for, but I'm loving the action between 1350 and 16. If it could just stay here and finally break that 16 with some gusto, I think the stock's got a chance to go up 100% this year. And again, it's been forgotten. That's what you want. And I'm also looking back at the Alcoas, the US Steels, the KMIs, the material stocks. I'm looking at the ones that were forgotten in 24. Maybe they wake up in 2025. I used to be a huge fan of Alcoa, still am, and that's my head's at. So, but still, right now, quantum's the name of the game. Waiting to see what happens with the Qs, and again, it's Friday. Get ready for the weekend.
Here, can you throw up that SolarEdge? This is really interesting. So you think that this can double? And by the way, it doubling means that all it needs to do is get to where it was in August.
Right. I mean, this stock has been left for dead. Every time they start it up, it gets nailed right back down. But if it does come out of that it comes out. And again, if you look at it on a 3-year weekly chart, it's so nasty. It's so awful. Every rally has been sold into. But if it could just get something, you're talking about a 14, 15 point move, just easy 15, 16 points on the stock. So it woke up yesterday. I'm just keeping an eye on that one.
All right, listen up. If you join Kenny's room before Monday, you can get the extended Santa Claus. Santa Claus rally did not come for the market this year, but it came for Kenny's room regardless. That's the beautiful thing about Kenny's room. There's always something happening, right?
Always something going on, yeah.
There's always something going on.
Yeah.
All right. If you join before Monday, get $500 off. I put the link in the chat, so check it out. And Kenny, keep on keeping on, man.
All right, guys. Good luck. Have a great weekend. Stay healthy, my friends. Happy New Year.
All right. We want to bring Louis back on?
Please.
I know, Louis, I know I have your charts here, so I have to add them. Give me 1 second, but we got a lot here.
Who's got better hair, Louis Sykes or Kenny Glick?
Great question. I was wondering that myself.
Sorry, Kenny.
Sorry, Kenny. Taking the L on this one, my man.
All right, Louis.
Not good. We can't throw shade to Kenny when he's not around. That's rude.
I think he's got the better accent, but of the hair game, it's.
We'll call accents.
Give me the Kiwi accent over the pizza bagel any day. Are you kidding me?
I think it's just because I'm
going.
I'm used to this accent, right? So we don't hear that accent.
The best accent is Louis making fun of Americans. Can we get that one?
We actually do have it. I didn't add it to my soundboard, but I do have the sound effect. I have to go dig it up, but I have it.
Can you tell me, Louis? Can you do an American accent talking about preparing for a football game? Can we get one of those?
Well, come on, guys. We do need to talk about cryptocurrencies here, and this is a finance show, not a football show. So let's go, man.
Wow, that
Let's
was
go.
pretty good. That was pretty
That
good.
was good. Louis, what does it say that my meme coin portfolio is up to 9 holdings now?
Wow.
Oh, look at you! You turn into a meme coin connoisseur over here.
I know. I know. I bought like 3 more yesterday. I tried to buy some the other day, but I was on my laptop and I couldn't like get authenticated and I couldn't buy it. It was very annoying. But in any case, yeah. I saw there's a meme coin that's the same name as my sister, so I had to buy that one, right? Gotta support the team. And then I saw like another one that made me laugh, so I had to buy that one. That was a whole thing. But
And I logged into my Spot.dog account and they sent me a whole bunch of Pingu tokens the other day.
I got some of those as well.
Hell yeah. Fantastic.
Anyway, all right, Louis, what's in these charts you sent over? You sent over a lot of charts. Pick one and let's talk about it.
Pick one. Let's look at the SPX IBIT chart. There's 2
Yeah, there's 2
potential alternatives.
Yeah, we'll start with this.
JC, what is this going to be?
Listen, this entire bull market, we have seen this pattern again and again and again, and they come in and buy them every single time. So the not a top pattern has been very reliable this entire time. Are you going to bet that this time is different? Are you going to bet that this time is different?
What I would love to see, now I want your perspective on this. I would love Bitcoin to undercut these lows. Everyone gets mega bearish, and then we just rip right back above. That is the setup that I would almost love to see in an ideal world.
Well, if Bitcoin's above 90, let's just call it, right? It's not exactly 90, but as long as it's not in the 80s, then the not a top pattern is in. Same thing with the S&Ps, right? We're looking at the S&P 500. Technically, you got new lows yesterday, lowest levels for the S&P 500 since before Thanksgiving. But the percentage of stocks above their 200-day moving average is making new 2-week highs. The percentage of stocks above the 20-day moving average also hitting 2-week highs. So I found it interesting that prices were making lower lows on the S&P and the NASDAQ for that matter, but the internals were actually improving. Does that mean that yesterday was it and now we rip? Could. It absolutely could. But I got to see it.
Yeah, it's interesting. I want to talk about let me attach this chart. Give me one moment.
How do you guys
Let's
feel
talk
about my
about the
internals?
commercials.
You think am I getting cute, chat? Am I getting cute by looking at those market internals, or you think there's something there? If you guys want to weigh in while the Lou Dog schools is here.
Let's look at these commercials. What do you think about commercial hedges? So commercial hedges, we always look at them with the smart money. But one thing I've noticed in the Bitcoin market is that it's a little bit different to how we analyze commercials in, say, the gold market or any other commodities market, where you only really want to pay attention when it's trading at extremes. But in the case of Bitcoin, ever since the CME overtook Binance as the largest derivatives exchange in 2023, it's actually been a really good indicator. So commercial hedges in the latter half of 2023 were mega bullish, all the way up to the March top, to where they sold down. They became net sellers, and that's when the crypto market put in its peak. And then they became aggressive net buyers in September of last year, right before this massive rally. We hit 100K, hit our first target, and now commercials are back to net sellers. What do we make of that?
How reliable do you think the commercial hedgers data is today relative to what it was in prior cycles? Is it more reliable than ever, or now that there's ETFs, it's less direct? How do you think about it? Can we put that in perspective first?
I think forget about it. I think the commitment of traders data before 2023 or before, we'll say, August of 2023 is completely useless.
Can you explain how we should interpret, where does this data come from?
So this data comes from the commitment of traders report from the CME. And what we're tracking here are Bitcoin commercial hedges positioning. So you can essentially think of it as the commercial hedges are the smart money. That's what we like to think about it in commodities markets and in futures markets. And they've absolutely nailed this Bitcoin trade. Aggressively bullish throughout the entire run, early 2024, aggressively bullish before the election, and then they were net sellers throughout that entire consolidation beginning in March. And then they became net sellers again once Bitcoin rallied all the way to 100K.
So this is just futures data, right? That's what we're looking at.
Yeah, precisely.
Okay.
COT.
Yeah. I'm just clarifying. Hey.
What when you're doing the COT work on crypto, Louis, are you also looking at the COT stuff for the Forex markets? I mean, they seem to, right?
Yeah, of course.
You're including that in your process, or are you just kind of taking the stuff that we're already doing, or are you doing separate work on that?
No, I just kind of take the work that we're doing and really just look more specifically at what's happening within the Bitcoin market.
Are the commercials in Euro and BTC? Is there something there? Is there a relationship between the two?
I'm not sure. I probably would say no, probably because the commercial activity is a little bit different in Bitcoin, where it's not you don't just want to be buying and selling the extremes.
And it's
It's
not as
actually
big of a
quite
market either.
yeah, and it's been a more reliable signal rather than just looking at the extremes. Because if you're looking at it in gold or euro, you only really want to pay attention when it's at an extreme high or an extreme low, and then you can make a signal from it. But in the case of Bitcoin, it's a little bit different, or at least it has been over the last year and a half.
Can we talk about the fund flows? Because I always have a hard time wrapping my head around like what I do with this information. So I'm really curious to, I always ask Todd Sohn. I always ask our other resident ETF experts on how they feel about these flows. Very curious. What does this mean to you?
I'm on the same boat. I think it's really difficult data to actually look at it and say, hey, what's the signal here? And how can I use this to help me make money? I think, again, it comes back to the extremes. I think it's more of an interesting data point. So if there's an extreme inflow or an extreme outflow, like we saw over the last few days, then you can say, hey, is this capitulation? Is this exuberance? But other than that, I don't really see too much signal in this. I think it's just more of an interesting data point.
If you overlaid the price of IBIT on this chart, would that reinforce the idea that like day to day, week to week, even month to month, this is not super actionable? It probably would, right?
Well, even just looking at this chart, I can see that there was a massive amount of inflows when the first ETF products came about, and those inflows just dramatically dropped in March and April, which is when the crypto market put in its peak. And
Right.
then when those inflows started picking up again was around, you can see on the chart there, October, which is when cryptocurrencies obviously began their massive rally. And now that we're back at 100K, we're seeing the complete opposite of that. And so again, it just points to the fact that we're at this really important level. We're at 100K, and we're seeing all these signs. We're seeing commercial hedgers taking profits. We're seeing the average altcoin. I want you to pull up that chart as well, Spencer. The average altcoin is down about 30% off its highs. We're seeing fund flows or fund outflows away from these big ETFs. And so we're just seeing this profit taking. It's just completely natural to see a lot of this digestion, a lot of this churn. So here you go. The average altcoin down 30%.
Is this top 100, Louis? Is this top 100?
Top 150.
Got it.
And so in December, again, this is something I've been really proud of, is that in December we just said, hey, look, Bitcoin hit our target, Ethereum is below overhead supply, Solana is retesting 260 for the first time. There's not a whole lot of reason to be overly bullish here. Much of the move has occurred. So what we want to see is we want to see a little bit of consolidation, and then from there see what the relative strength is like, and then we can begin edging back into the market. But for now, I just want to see some more signals that suggest that the bull market's back, and right now we're just seeing some more consolidation, some more churn. Absolutely normal behavior. It would
All
be
right.
yeah.
Hold on, I want to talk about something, and I think it's important. Curious to hear your thoughts. So last year, the total crypto market cap increased by, it went from, you guys can help me with the math. It went from 1.6 trillion to 3.1 trillion. So added $1.5 trillion in market capitalization last year, right? Hold on, it gets better. Because when you go to the beginning of 2023, we entered 23 with cryptocurrencies at $750 billion in market capitalization. Now we're at 3.3. So in 2 years, we went from 750 billion to 3.3 trillion in 2 years, and then added $1.5 billion just last year alone. So basically doubled the market capitalization in 23 and then doubled again in 24.
Mm-hmm.
Seems like a lot. No?
It does. Yeah.
Oh, so we're due for a pullback or consolidation.
Are we?
I don't know. That's
the whole thing is that you had a massive pullback and consolidation before that.
That's also true. Yeah.
Right. So
something that we were talking about earlier this week is it wouldn't surprise us to see multiple 10% corrections in the S&P 500 this year.
Exactly.
And so what does that entail for Bitcoin? 2024, fantastic year, but it's not often that we have that. I saw a really interesting chart on Twitter. It's not often that we see greater than 20% moves back on back. And so it wouldn't surprise us to see a little bit more choppiness into 2025, particularly with the S&P 500. And so, again, what are the implications for stocks and or for crypto in that? It remains to be seen, but I think that there's a heavy level of influence there.
Wait, when is the last time Bitcoin had like a conventionally Bitcoin-esque drawdown? Like August, right? Where
what is that conventionally?
I don't know.
Conventionally Bitcoin.
I'm not sure. I'm not sure how you want to quantify it, but Bitcoin is volatile, right? It has these flash crashes. It has these drawdowns where
it was at 73 in March of last year, and by August it was down under 50. Right, so that's a 30.
Yeah. I mean, even from July to August, so it's been. Louis, we talked about this. It's been less volatile of an asset, right? Hasn't it?
Yes, Bitcoin has, as it's gotten larger. But I would say that the March to August, September period was actually a bear market. It was a stealth bear market. Even though Bitcoin was down 30%, the average altcoin was down 75%. So it absolutely was, my understanding, it was absolutely a bear market.
Well, we've come out of that. so
to say the least.
Yeah.
All right. I got one more chart. We'll let Louis go. We know it's late. What time is it over there in beautiful New Zealand?
It is 3:30 in the morning, and I'm absolutely happy to be here talking cryptocurrencies on a Saturday morning.
Dude, I absolutely love it. Louis Sykes, get some rest. We appreciate you being here. We know you're a busy man.
Wait, so. I'm going to drop the link in the chat. If you want to get Louis' free daily note, I will drop that in the chat. Get Louis'
free daily note. It's a great note. You do a hell of a job, Louis.
What are you doing if you're not getting our free daily note?
If you're not getting the crypto daily note, I mean, what are you even thinking?
Your life has just gone terribly wrong. You need to reevaluate.
I think so. Yeah, I think so.
All right, I'll drop it in chat in a minute. Thanks a lot, Louis.
Louis, having a great
guys. Have a good weekend.
3 a.m. Great hair day.
Yeah. All right. Normally we'd have Alfonso on around this time, but Alfonso is preparing to do his very first Hot Corner weekly strategy session video.
Who's moving up in the world? Moving up in the world? Fonzarelli.
So we are going to have Sean on the show in a couple of minutes.
Can you put on slide 1 before Sean? I gotta hop, but I do want to.
What is slide 1? I'm afraid.
Yeah, throw up. Why are you afraid of slide 1?
I don't know.
So this is so Dan Marchese bringing this up. Great time to bring it up. This is the equally weighted S&P 500 versus the market cap weighted S&P 500. Back to the great financial crisis lows here. If there was ever a time for the equally weighted index to start some outperformance, this would be a perfectly logical place for that to occur. I see you, Dan. I see you. That shout out, Canada. Shout out Canada, our friends in Toronto, eh? Right? How do we feel about this? Chat? Anybody want to weigh in here on how we feel?
Yeah, it would be logical, but we'd still have to see it, right?
So to me, this is going to be part of the conversation of, you know, like yesterday in our meeting, we were talking about what it's going to take for international markets to start to outperform the United States, right? The U.S. big dominant winner, the trends across the board, U.S. over emerging markets, U.S. over developed markets. You know, it's all U.S. Now, with that being said, what is it going to take for the U.S. to begin to underperform? I think, and Strazza agreed, you know, as we were talking about it, that it's going to have to be some technology underperformance. Technology can't be such a dominant winner. There needs to be some other areas. And I think that same thing applies for the equally weighted index, right? You're going to need to see some of the others. There needs to see some technology, some large cap growth underperformance here
for a while, because we do see that, but we see it for like a week, right, or 2 weeks.
Yeah,
right?
but even when we see technology underperforming, communications is outperforming. Consumer discretionary is
Yeah.
outperforming.
Okay. Yeah, it's true.
Right. So that's why I'm saying it's not just tech, even though you know, tech is a big part of it. I think it's
so it's not just the tech sector you're saying. Oh, it's technology more broadly. Got it.
No, it's growth.
Okay. What?
Growth more broadly.
The same thing. All right.
No.
Yes, it is. But okay.
No, it is absolutely not at all. It is like, for example, if you look at the the Russell 1000 value index, and you look at the largest weightings there, you're not going to find much technology at all. In fact, technology represents 10% of the Russell 1000 value. However, the Russell 1000 growth index is 50% technology. 50% technology, 15% consumer discretionary, and another 12, 13% in communications. So that's my thesis as to what it's going to take for the equally weighted indexes to outperform, what it's going to take for the international indexes to outperform. I think that's
how many people are like me and just not remotely positioned for that scenario. Probably most people, right? It's not my fault that for my entire investing career, the U.S. has destroyed everybody, right? So if that were to happen, I would have some hard decisions to make. And I do have a little bit of the VEU, right, which is the Vanguard ex-US, right, all world, but it's been a freaking dog, right? So
because they don't have any technology in there, and you know, and there's no mega cap growth in there.
Yeah. Well, anyway, that would cause some people to have to ask some very serious questions. All right, Sean, are you here? Yes, you are. Cool. Let's bring Sean on, and as you wrap up the week. Wait, Sean. Oh no, there we are. Okay.
Johnny baby.
Boy, man, shame on you, Spencer, not having exposure to the Polish zloty. I mean, are you even trying?
No, I'm not. I'm not trying at all.
It's zloty. It's zloty.
Oh, that's right. Hey, speaking
the nanny
of
across the street, she that takes care of the kids across the street. She's Polish, so you know, we hang out in the playgrounds, and you know, we talk about pierogies and guamkis and whatnot. And she was explaining to me, I was like, "Yo, how about that zloty hitting the 52-week highs?" She looked at me like I was crazy. She's like,
"Hey, speaking of mispronouncing things, I'm glad you brought that up because I got a bone to pick with you, JC, and I'm glad you're here. I thought you were going to dodge me here on the video.
All right,
you and I and everyone here at All Star Charts have been doing a very terrible disservice to our good friend Steve Strazza. His last name is Strazza. Did you know that?
Yeah.
Strazza.
I think it's Strazza.
We pulled it out of him a couple weeks ago that he told us that he admitted to me in a podcast that we did with Tom Basso that yes, his name is Strazza, but he didn't have the heart to correct us. So for all these years, you and me and Spencer and everybody, unbeknownst to ourselves, have been mispronouncing Steve's last name, and I feel
like
terrible.
At the
about
end of
that.
the
I feel
day,
like 8 times out of 10 we do call him Strazza.
and we call him way worse things.
Well, that's true, and that's deserved. But
Yes.
mispronouncing someone's last name, come on, man, we got to do. We got to do.
I
better.
am the king. I am the king of people mispronouncing my name. So I don't feel that bad for him. Strazza's doing just fine.
I have
Strazza had a
no
hell of a year.
sympathy for any of you because I have it worse than all of you because I have 2 first names and 2 last names. Okay, no sympathy for anybody here.
Steve Strazza, my brother, I love you, and I feel terrible about this. Years of injustice. I will do my best to say it correctly going forward.
All right, listen, guys, I'm gonna hop. Sean, can you do me a favor? School these kids on how the market's continuing to be interrupted, and we're like in this directionless market, kind of like what we talked about yesterday. I'm gonna hop, guys. Adios, love you.
Before we do that, Sean, we got to give you your flowers for your video yesterday. You did something that everybody should do. I have not done mine yet. I'll do it this weekend probably. A year-end portfolio review where you look back and you looked at what you did, what worked, what didn't work. I'm going to put the link in the chat right now. But as I do that, tee it up for us. What did you talk about yesterday?
One of the things that JC and I and Strazza talk about all the time is that what we do here at All Star Charts with our research and the stuff that we share, we share all this because we're doing it anyway, right? These are things that we do in our process to be the best traders and analysts that we can be, right? So that the scans that we share, the trade setups that we share, these are things we're doing anyway, right? So and JC calls it a selfish endeavor, right? We're selfishly doing this for ourselves, but we share it with everyone because we can all benefit from it. Well, with that in mind, I kind of had an epiphany a few weeks ago. I was like, I was starting to do my annual end of year portfolio review. And I was like, I've been doing this for a while now, but I've never really shared this with everybody. And I said, you know what? That's got to change. We got to do this right. And so this year I compiled all the data of all the trades that I did with All Star Options and kind of bucketed it out by different strategies to see, what strategies are doing well for me, which ones are not. And the results for me, as it is every year, was pretty illuminating. And in fact, there were a few takeaways this year that were even more illuminating than in years past that I think are probably going to drive a change in some of my decision making going forward. And so I thought, hey, I got to share this with everybody. And so we did a video yesterday where or I did this video yesterday where I went through kind of the output of this end of year review. And look, it's probably the most important thing I do. And I'm glad that I was able to share with people. I'm getting a lot of great feedback from it.
What'd you learn aside from that?
One of
some things worked and done.
Probably the biggest takeaway for me is that there are option strategies that I use, and I'll use any option strategy under the sun. And anyone who subscribes to All Star Options knows that I use a variety of strategies and a variety of reasons. I always say that options give us options, right? That's one of the best things about options is that there's always a strategy to use in any market situation. However, when looking through all the data, I found that, there's some strategies that I may make some money on, but due to the nature of the strategy, I have to trade those types of positions a lot smaller than my other positions because risk management is job number one. And if I'm putting on a position with a theoretically undefined risk where I could take a very large loss, then the only way to manage risk in that situation is to trade it small. Okay. Again, nothing wrong with that. But what I found is that on those trades where I did very well, meaning, from the place I got in on the chart of the stock and the place I got out, it was a great run. And by all measures, it's a great trade. But the impact to my portfolio wasn't all that impressive because I had to trade that position small due to the fact that there was unlimited risk. And a perfect example is the trade that we did early in the year in C Limited. We've talked about this trade a lot because everyone likes to make fun of the fact that I had no idea what the company even does. Doesn't matter. It was a great trade, but when I looked at the impact of my portfolio, it was, it didn't really add that much alpha to my performance for the year because I had to trade it small, because in this particular position, it was a risk reversal where I had shorted naked puts to pay for the long calls. Again, nothing wrong with that trade, but it was a small trade by necessity. So for me, I think that was the biggest takeaway. There were a number of takeaways, but that was the biggest one. And so I think going forward in 2025, at least so that I could have better performance in total for my portfolio, I want to focus more on positions that where I can clearly define my risk, which allows me the ability to trade it larger.
Do you also think about in terms of time, like the time I spent on this trade, and the result was negligible in the grand scheme of things?
Well, I do track how much time I'm in the trade. In fact,
I don't just mean in the trade. I mean the time you spent, like, thinking about the trade, all the mental time,
sure.
managing it, and at the end of the day, okay, maybe I made 30%, but it was such a small trade that, like, was it really worth all that time, right?
No, you're absolutely right.
Right.
At the end of the day, when you have winning trades that consumed a lot of time and ends up that you made just a little bit of money, yeah, it's great to make money, but boy, if it caused me stress and if I had to waste time, tracking it left and right, making adjustments, yeah, it's not necessarily worth your time. I mean, as an options trader and as somebody who uses a lot of option strategies, I get questions all the time from people. Hey, what's your favorite? What's your go-to strategy? Are you an iron condor guy? Like, people throw fancy terms at me, and I think I underwhelm people sometimes when I say, listen, as an options trader, my favorite strategy in the world is just to buy calls on a stock that I'm bullish on, particularly a stock making all-time highs. That's my favorite trade in the world. It's the simplest, non-complicated. Any basic options trader could figure out how to do that on day one of learning how to trade options. And that's my favorite trade. Why? Number one, it's simple. And number two, if I go back and look at all my numbers, which I did in the video you guys can watch, all of my biggest winners came from those trades. In fact, there's 5 particular trades that they made my year. Those 5 trades where all I did was buy calls. Those 5 trades made my year. If I did not have those 5 trades, I probably would have been negative on the year. So that's all the evidence I need.
Yeah. That's really insightful, right? Of all the trades you made, it was 5 that kind of decided the year you had, right? And
right, and that's not a shocking revelation to anyone who's a traditional trend follower, right? Like people who like a trader like a Jerry Parker or a Tom Basso, or the famous turtle traders. They will all agree with you and tell you. I mean, even Jason Purse will tell you that as a trend follower, we know that at the end of the year, it's going to be just a handful of trades. We may have done 100 trades or 1,000 trades, but it's only going to be a handful that really drive the portfolio returns for the year. That's classic trend following. And at deep in my core as a trader, I'm a trend follower. That's my gut, right? That's where I cut my teeth in the markets. When I started learning trading, I used to run a commodity hedge fund years ago, and it was all about trend following. That's the style of trading that for me makes the most sense. And so, yeah, I'm not surprised at all that my biggest trades of the year were trades that were simple trend, riding a trend and holding it as long as I could and rode it till the end. Yeah, that's how it should be.
That goes back to what we talk about all the time about, like, winning percentage, right? It's great to have a great winning percentage, but it's a misleading number. It doesn't tell the whole story.
Completely overrated.
Right?
Completely overrated. The number I revealed yesterday, I don't have it in front of me, but all my trades in total for 2024, my win rate was 36%, I believe was the number, somewhere in that area.
The losses are small and the wins are big.
That's right. And in the long call trades, which made up the biggest bucket of my trades and also where my biggest winners reside, my win rate was only, I think, 24%. I mean, or maybe 26%. I mean, On that, when you just hear that number, it sounds terrible. Like, what are you even doing? You're losing 3 out of 4 trades. Yeah, I am, but they're small losses. It's the big wins that matter, and that's how
Yep.
that's what makes it all work.
All right, this weekend is going to be tomorrow is going to be a great day for me. I'm doing 2 things that I look forward to doing the most. One of them is what you just did, my like annual, and I only do it once a year. The annual end of year full review, the financial review, all the accounts, all the assets, all the performance, what you kind of just said, what worked, what didn't work, and kind of where I stand. And I love doing that. And I really try hard not to do. Someone in the chat just said that they do this weekly, monthly, and quarterly. I don't do that. I try really hard not to zoom out very often. Otherwise, I'll just obsess over it, and I don't need that kind of stress in my life, right? So I'm going to wake up. I'm going to go to Costco, which I look forward to because I freaking love Costco. I'm going to come home. I'm going to do this review. It's going to be a great day. Tomorrow's going to rock for me.
Oh man, you and my wife love going to Costco.
Oh man, I am such a fanboy. We only go every like 6 weeks or so, 6-7 weeks. So last time we went was before Thanksgiving. So I'm going tomorrow. I'll drop a couple $100. It's going to be great.
You know, speaking of Costco, we've talked about this in the past, but we run a small little investing account for my son. My son is 10 years old, and there's just a few $1,000 in there, nothing big, but we use it to teach him about investing. And we have 2 rules for the investments. And there's only 11 stocks that we're in, and the 2 rules are
that's
number
a lot.
1.
11? This is a lot.
Yeah, well, it started off as 10. We have an 11th, and I'll explain that if you want in a second. But the 2 rules are, number 1, it has to be a stock. It has to be a company that we as a family spend money at that company every month.
That's
right?
a good rule.
Something that we spend every month. That's rule number 1. Number 2 is the company has to pay a dividend. Those are our only 2 rules. And really the dividend piece of it is just because I want to teach my son about, what companies do and how they reward shareholders and all that stuff.
Okay.
Which obviously precludes us having Amazon, which we shop at Amazon every day like everybody else. So we don't have any Amazon in our portfolio, unfortunately.
Okay.
Well,
interesting.
Yeah. So anyway, portfolio's done really well. But man, the one big miss for us is that my wife loves Costco, but Costco used to be pretty far away. So we didn't go to it very often. It was like a 45-minute drive, an hour drive to get to the nearest Costco. So it wasn't a thing that we went to very often. But 2 years ago, a new Costco opened close to us, like 15 minutes away. So now my wife is shopping at Costco every week at least.
Yeah,
right?
That's not good either.
And I know, but we forgot. It slipped our mind that we did not invest in Costco for my son's portfolio.
Yeah,
as we should have 2 years ago. And boy, I don't know if you've looked at Costco's chart in the last.
Older. I've looked at it.
huge miss for us. So I'm a little salty about Costco these days because my son really would have killed it there, but can't win them all.
Can't win them all. I did read this morning that the share of retail sales, the overall piece of the pie in America that Costco, Walmart, and Amazon has gone from like 14% 10 years ago to like 18 or 19% now. It's just the big are getting bigger, and they're doing it at the expense of grocery stores and dollar stores and individual retailers. So, what can I say? I'm a fan. So tomorrow's going to be a great day. It's Costco in the morning. It's portfolio and accounts review in the afternoon. What's not to love about that? Sean, you inspired me. Your video yesterday was excellent. Again, if you did not catch it, the link is pinned to the top of the chat right here on YouTube. I'll bring it up on the screen one more time. You can see what it looks like when you actually go there. And we will make sure to be emailing this out as well to everyone today because it was fantastic. So, Sean, great job. Let's wrap it up here. Thanks for watching, everyone. Thanks, Sean. Thanks, Kenny. Thanks, Louie. We'll be back on Monday. No full week next week. We have the Thursday holiday, but that's okay. New guest on the show on Monday. I won't spoil it, but a new guest on the show, so that's always fun. And we'll see you there. Drop us a like. Hey, subscribe to the channel. It really does help. If you not just like it, if you just subscribe to the channel, YouTube loves when the people that watch your videos also subscribe. So if you haven't already, subscribe to the channel. You'll get notified when we go live, and I would appreciate you. Thank you very much for doing that. So thank you, Sean. Have a good rest of your day, everyone. We will see you next week. If you are a member of Breakout Multiplier, you'll get the weekly strategy session today. If you're a member of Hot Corner Insider, you'll also get the weekly video today. And that's what I got. So go make some money. Happy trading, or as Sean says, trade them well. And we'll see you guys on Monday, all right?
Happy New Year, everybody.
That too.
Run it. I can't take no loss. I don't even know what it costs.